Welcome back to our special interview segment, Shoot the Shot, where we will dive into the world of mortgage financing and home ownership. Today, I have a special guest joining us, Yoseph Assefa, a senior mortgage consultant with extensive experience in helping individuals and families navigate the complexities of the mortgage industry, a knowledgeable expert in CHFA, Colorado Housing and Financing Authority programs and loans. Welcome.
Thank you so much.
Well, actually, I should say thank you for having me here at American Financing.
Thank you for being here. I appreciate it.
I look forward to shooting the shot with you today.
I think I got a little game, so we'll see.
Yeah,
what
man, you got some good arms too, so I'm kind of scared.
Let's see what happens.
Let's see who wins. We're gonna play a game of CHFA.
Let's do it.
CHFA. So
it's the mortgage version of horse, right?
Yeah, mortgage version of horse. So I'm gonna play rock paper scissors just to see who goes first. 1, 2, 3, shoot. Oh snap! I go first. Oh, oh snap! Oh. I'm a C. Can you explain what CHFA is and what it has to offer to Coloradans?
Definitely. So CHFA is a program that is put together by the state of Colorado, and it's a program to help first-time home buyers and buyers that have not owned a home in the last 3 years. That's really important because a lot of people just assume because it's a first-time home buyer program that you can't use it if you've purchased a home 5, 10, 15 years before. But it is a situation where you can be a first-time home buyer or have not owned a home in 3 years. Okay. And what CHFA does is it helps these clients come up with down payment. And that's the main purpose. That's the main programs that we use here. They have two main programs that we use a lot here, and there's more programs that we can get into, but I'm going to focus on the ones that people utilize the most. The first one is a grant program, and the second one is a silent second program. So the grant program gives you 3% of the loan amount towards your a grant towards your down payment. And then the silent second program gives you 4% of the loan amount towards the transaction. Now, there's a couple of differences between the two programs. I don't think one is bad and the other one is good. I think it just depends on the customer and what their situation is at that time to decide which way they want to go. And the nice thing is when you qualify for that CHFA program, you don't have to qualify for a specific program within it. If you qualify for CHFA, you qualify for CHFA. You can utilize either program at when the time is right. Let me get you your H now, okay?
Oh, so close. Whoa! Did I make it?
Yeah.
Oh, good luck, dude. Oh, welcome to the C Club. Oh, dang it. Left-handed? Oh, let's go ahead and hear about those two programs that you were talking about earlier in a little bit more detail.
Definitely. So the first program, like I said, is a grant program, which gives you 3% towards your purchase. And it's a grant, so that money, you don't have to pay it back. It has no interest on it. It's money that you're getting from the state. The only thing that comes along with it, because you're not paying that money back, is the interest rate is usually a little bit higher than the other option, which is the silent second. The only, in addition to that, you got to remember, if you're doing an FHA loan, your minimum down payment is 3.5% down. So if you're only getting 3% from the grant program, you still have to cover the remaining down payment and all of your closing costs. Now, the silent second program, let's talk about the name first. The reason it's called the silent second is because there's no interest on that second mortgage. So
interesting.
Exactly. So if you get, let's say, $20,000 from the CHFA program on that silent second, it doesn't matter if it's a year from now, 5 years from now, or 30 years from now, when you pay that money back by selling the house or refinancing, that amount of money that you got, if it was $20,000 to start with, it will still be $20,000.
You still have to pay that back.
Exactly. But there's no interest. So it doesn't grow over time. So that's why a lot of people end up using this program. The other benefit is it is 4%. So it covers your full 3.5% down payment, and it gives a little bit towards your closing costs.
That's amazing.
In both scenarios, you are responsible for the closing costs as a buyer, unless we can get some seller concessions working with an agent like yourself and you negotiating a good deal for the customer. So we're getting some of that closing cost covered by the seller. Exactly. Unless that happens, the customer or the buyer is still responsible for the closing costs on both programs, but the down payment will be covered.
That's awesome.
Yeah, yeah.
Which one is more popular? You said the silent
I
second
would
is the most
say
popular one?
exactly. I would say we use the silent second the most because it gives the customer more money, and the interest rate is slightly lower, and it just gives people a little bit more flexibility on the closing costs because
wow.
some of the money is going towards closing costs. So, but I've done plenty of grants, and like I said, there's not one good versus bad. It's just particularly what is your situation, how much down payment, how much monthly payment can you handle, and how important is it to you that you have a silent second sitting behind your first, or you want to be done with that process completely right when you close on that purchase. So it just depends on the person.
Got it.
Yeah.
Are there certain qualifications that people need to meet before they can choose either program?
That is one of my favorite parts about the CHFA program is the qualification is pretty straightforward. The minimum credit score that you need is 620.
Oh, wow.
That's it.
Okay.
And the great thing is with American Financing, a lot of the customers that are coming in that are under 620,
Right.
we're able to get them to over 620 using our credit care department. I really truly believe that we have one of the best credit care departments in the country.
Absolutely.
Like I was just telling somebody, out of my 10 closings last month, 4 of them came out of credit care department where they
Wow.
came in below the credit limit that we needed, but the customers had enough income, debt to income ratio was in place. All they needed work was on credit. So we were able to put them in the credit care department, have Evan work with them, get them qualified, and then get them under contract and close. It's incredible how much they're doing in that department.
Yeah.
A 620 credit score is the minimum credit score for CHFA program.
Okay.
That will allow the customer to go up to 50% debt to income ratio.
Okay.
And then if you're over 660, you can go up to 55% debt to income
Oh,
ratio.
wow.
And if we find out that, hey, the property that we're looking at, we need to be at 55% debt to income ratio, we'll go right back to credit care and have our team work with the buyer to get them to over 660. Yeah.
That's
exactly.
really amazing.
Exactly. Yeah.
That's cool. I didn't know that about the two programs
Yeah.
of CHFA.
Yeah. It's slightly different, but both of them are incredible programs.
They sound like it,
Yeah.
for sure. So, Yosef, can you tell me what types of mortgage products does CHFA offer?
Definitely. So overall, CHFA offers both conventional and FHA options.
Okay.
So that's the first thing to know. And the credit requirements are still the same. So if you qualify for FHA, you also qualify for the conventional program.
Amazing.
Another program that a lot of people don't know about is CHFA also offers a non-down payment assistance program. So the reason you would choose that option is if the rates are better than what the market is offering. And sometimes it is, depending on your credit profile. So there's a conventional, there's an FHA, and there's also a conventional that does not have down payment assistance, but the pricing on the rate sometimes is more beneficial than going with a standard conventional loan. So we always look at that before we make the decision to see, if the customer doesn't need the down payment, but we're trying to get a lower interest rate to get them to fit into an approval.
Right.
That's an option that we definitely look at.
So if the programs are conventional FHA, are there programs for VA and USDA?
So CHFA does not have a VA or a USDA program.
Oh, CHFA doesn't have a VA or USDA
No,
program?
they do not.
Okay.
All of the programs that are under VA and USDA, we work directly with the VA and USDA to get those customers. And in this scenario, VA and the USDA go up to 100% financing, so they don't need the down payment assistance.
So they don't need they don't need to put anything down.
Exactly. I'm trying to do one from the plants here. Make it a little challenging, so I'm going into the garden here.
We're gonna go straight into the jungle.
You got to do the sky hook out of the garden.
You're right in there. Oh, I know you didn't make it, but I love nature. So I like to be in the forest. I hunt trees and stuff.
Let's do it.
Are these real? These are real.
These are real.
What?
Yeah, we take care of these.
These are freaking real.
Yeah.
Okay, so I'm gonna come in from here, and then I'm gonna kind of just overhook it. Oh, so close! Can you tell me what are the current interest rates and terms available for CHFA loans?
Definitely. So just overall, the CHFA does move with the rest of the market, but it doesn't change every day. So we get a rate sheet from CHFA every day, but the rate changes, I would say, probably on a normal year, I would say it changes probably every 2-3 months. So it doesn't change very often.
All right.
Currently, the CHFA Silent Second program,
Okay.
the current interest rate is 6.875.
Okay.
And then the program that has a grant, which I told you has a slightly higher interest rate, right now is a 7.375.
Wow.
So
Okay.
slightly a little bit higher than the Silent Second program for the reasons that we talked about. But like I said, CHFA will adjust according to the market,
Right.
but with a little bit of a lag. They like to kind of see a full view of what's happening in the marketplace before they adjust their rates. So you don't see changes, happening on a day-to-day.
Right.
It's more, month-to-month type of changes you're going to see.
Okay.
But those rates are available to us every day, so anybody can call in and check what the CHFA rates are. We don't lock in the rate until you get under contract. That's a very important thing.
Wow. Okay.
So today's rate doesn't really matter for somebody that's not getting under contract today.
Okay.
So when you get under contract, you find the perfect home, then we can kind of talk about what the rates are, just because that's what the rate that's going to affect you specifically.
Okay.
Yeah.
Could they lock the rates like by paying?
So there are ways to do a lock and shop.
Okay.
We have programs for that, but that's
with CHFA,
not with
they
CHFA.
don't?
Not with CHFA.
Okay.
CHFA only locks once there is an address and a contract in the file.
Oh, interesting.
If you're doing a standard FHA or conventional loan, you do have the option to lock the rate on a 90-day lock or 70-day lock and shop until you find something.
Okay.
Yeah.
How do they compare to the conventional and FHA?
So right now they're right in line. I mean, the last couple of weeks we've seen pretty aggressive rate increases just because of some of the gridlock in Congress and some of the other economic reasons. So right now the rates are pretty comparable to what the market is doing. But usually they're a little bit higher because they're coming with a system. But just the times are wild right now where rates are pretty elevated. So even the CHFA rates are right there next to the market, and they compare pretty well. One under the arm like this, and then a backward shot.
Oh, almost, dude. It like grazed it. Do you know how to do this? Wait, I can't even do it. Wait.
Go.
And then, oh!
So since all of the trick shots have not worked yet, I'm just gonna do a regular shot.
I'm gonna try a regular shot too.
All right.
Kobe. Yeah. Okay.
Off the glass.
Off the glass. Right off the square.
All right.
Oh, welcome to the CH Club. How does the CHFA loan application process work, and what documents are typically required for the program?
It's actually pretty straightforward, especially the way we do it here. So the first thing that we want to do is we want to verify your income. So we want to see what your income is, what kind of income you have. And so we always ask for a few things: copy of your photo ID, 30 days of your most recent pay stubs, and 2 years of your W-2s. That gives us a full picture of what your income looks like. Okay. If you're self-employed, instead of 2 years of W-2s, we'll ask for 2 years of tax returns. Okay. Now, after that, the next piece of information we need is what your credit profile looks like, what your debt to income ratio looks like, how much liabilities do you have. So we'll need to pull credit for you. But once we pull credit and we have a very open side of what your income looks like, then we'll be able to qualify that loan within about 24 to 48 hours. So
quick.
Yeah, it's very quick. We underwrite everything in-house for approval. So we don't have to send it to CHFA, get it approved, and bring it back. So that's why the process is a lot faster. Yeah. As long as we have all of the documentation, we can have everything approved within 24 to 48 hours. Yep. And for some people that have never purchased a home or are not comfortable doing this electronically, we have a beautiful office here. That's where we're at today. Yep. You can always come in, ask for one of us, and we can walk you through the process inside of the office and do everything manually. Or if you're, on the move and high tech and want to do it electronically, you can call us and do it online too. Yeah.
We're here too. The realtors are available. So if you step in here realtorless, Yosef and the other mortgage consultants will be more than happy to connect you with a professional realtor who will be able to guide you through the process as well.
100%.
We work with these professionals, and we'll be sure to take care of you with whatever program you decide to choose.
Yep.
So
100%. Having the right agent really is one of the most important things after getting approved. And that's why we love working with Najib and the other agents that are American Home Agents, is because we have such good communication with each other. And that's so important in this market. When you're having to do counters, when you're having to ask for seller concessions, when you're doing all these things, if you don't have an agent that's communicating well with your loan officer, things will fall through.
Are there any limitations or restrictions on the properties that can be purchased using a CHFA loan?
That's a really good question. So there are some limitations, but that's the job of the loan officer, and in conjunction with the real estate agent to kind of sniff those things out. So the first thing is CHFA does allow manufactured homes, but the specific requirements are the home needs to be on a permanent foundation, and it has to be built after 1976. So those are the two main things that you have to look out for. Now, if you're doing an FHA loan, the property has to pass an FHA appraisal. If you're doing a conventional CHFA, it has to pass a conventional appraisal, and it has to appraise for the purchase price that you're purchasing it for, unless you're doing an appraisal gap, obviously. So those are just general requirements that any loan has to pass through. But outside of that, there's really not any other main requirements that CHFA has. Additional one-handed off the glass.
CHFA.
CHFA.
Oh, damn! Didn't even.
CHFA. CHFA. It wasn't planned. It wasn't
went
planned.
in the other? No way.
It was not planned.
That's still, dude, that still counts.
That still counts?
Let's count it.
All right, let's count
dude, because that was cool.
Let's do it.
Oh!
Do the granny scoop.
The granny scoop?
Yep.
Grandma!
Do you want potatoes?
Yeah!
Do you want potatoes?
We can't do granny scoop backwards.
Yeah, that's something else.
We need 2 fingers on each, on each side of the book.
Oh, close. That scared me though. It was close. I grew up playing soccer, so I'm gonna bring soccer into it a little bit. I'm gonna do a little header.
Oh! I'm gonna try it too.
Yeah, do it.
I played soccer for like 6 months. I'm gonna take off my glasses because I lost my other glasses in the mountains.
Oh, nice.
In the river.
Gotcha.
I forgot that they were on my face.
Gotcha.
All right, you ready?
Yep.
Oh!
That was close.
Oh! Can you provide some examples of successful home buyers who have used CHFA programs to achieve home ownership?
Oh yeah, for sure. So I have super recent examples that I can go into.
Okay.
Amazing family, actually moved out here from South Africa, and I've only been in the country for 2 years. Called us. We pulled credit. Credit was a little bit below where they needed to be. They were over 600, but under 620. So we got them into our credit care department. Got them both of them over 620. And found them a house in Colorado Springs with the amount of land they needed.
Amazing.
They wanted a barn. They wanted to start a new business. So it was perfect property. And then one of the agents that I was working with at the time from AHA, from American Home Agents, was able to get them $10,000 in seller concessions. So their down payment was covered by CHFA. The closing cost was covered by seller concessions. They only had to come up with $1,000 to get into that home. So this was this closed about 30 days ago.
30 days ago.
Yeah.
Wow.
A $400,000 property with the minimum amount CHFA requires, which is $1,000 down.
Just $1,000 down.
Yeah.
And they work their way up with the credit care program
100%.
help too.
100%. They worked with us for about 2.5 months.
2.5 months until they could achieve their
Exactly.
dreams of home ownership.
And now, I mean, they have so much. There's a new development going in across the street from them. Their equity is already exploding just because of the things that are happening around that property. So it just puts them in a totally different trajectory when it comes to wealth and generational wealth and just putting their family in the right position.
These programs set people up for
100%,
success.
100%.
You know, it's not like, I mean, you're just like borrowing money and they're like, you know, a mob.
Yeah. No, it's not. It's not.
Like,
you know, exactly.
Freaking mafia.
Exactly.
We're gonna break your legs if you don't pay us back. How does CHFA compare to other mortgage assistance programs available in the state of Colorado?
It's my favorite one. I'll be very honest with you. We also do a program called Metro DPA. It's a Colorado program, which also has a great options.
Okay.
We also do national down payment assistance program like Essex and Chinoa and other programs like that. But when it comes to some of the main things like rate, like how easy the process is, what are the qualifications, what are the limitations and requirements, I just think CHFA makes it really easy for us, the loan officers, and also super easy for the customers that are taking advantage of it. Not to say that the other programs don't work as well. They do work really well.
Right.
But as far as making it simple and easy to access, CHFA is
the best. Yeah. Last question for us today is, what advice would you give to potential home buyers considering CHFA programs or loans?
To be honest with you, the advice will be the same for anybody looking into any kind of loan or looking at home buying for the first time or for the second time, whatever the case may be, is start the process as early as possible. That's my biggest advice. Don't wait until you're a month out or 2 weeks out from your lease ending, or or don't wait until you find the property on Zillow or Redfin and then try to get pre-approved at that time. Start the process right away, because you'll be surprised how many things that can pop up that we need to address during that process. We don't want you to be dealing with those things at the time where you should be focusing on finding the right property, going out there looking at properties with your agent. We want you to be focused completely on that, not me reaching out to you and asking for another piece of documentation or asking you for a contact for a verification of employment, or whatever the case may be. We want to start the process as early as possible, so we are 100% confident when we give you that a pre-approval letter and say you can go shopping for that amount. You won't have to worry about anything at that point. More specifically for CHFA, yes, we can get you into a home as low as $1,000, but I like to be really conservative with my buyers. I want my buyers to be in the best position possible. So I always say, save more than what you think you need for the house. I'd rather tell you, hey, you don't need that much money anymore. All you need is $1,000 to get into this home, instead of talking to you about, hey, we need to come up with another $4,000 or $5,000 only a week out from closing. So save as much as you can, and then talk to a professional. Talk to your real estate agent. Talk to myself, and let us know exactly what's going on and what your goals are. Be honest. All we can do is tell you you're approved, or you're not approved right now. This is what you need to do to get approved. So both the responses are going to be positive, but it puts a lot of people at ease when they know they're fully pre-approved. So start early and go above and beyond when it comes to the savings.
This is great advice.
Exactly, man. Thank you so much.
All right, we're gonna finish up the game. You ready?
Let's see.
All right, who's gonna win?
A little shout out to the old school side hook.
Oh! All right, Dr. J, this one's for you, man. Not that one.
We're gonna fake a pass, and then we're gonna shoot one-handed.
All right, here we go. Oh my God, dude. Oh! What did you do? Walk by? Oh, I'm a CH now.
Yeah.
And you're a CH too.
Yeah.
Chia. How did you even throw that?
It was a flick of the wrist.
A flick of the wrist. CHF. I'm a CHF.
What I was gonna tell you guys was I'm gonna make the shot.
Oh my God! If I don't make this, that's it.
It's over.
Oh my God, I lost to Sammy on the pool. And now I'm gonna lose to you on this.
Loan officers are just a little bit, more athletic.
Yeah. I might make this. Oh, dang, did I lose?
Yes, you lost.
CHFA.
Yeah, CHFA.
I'm a CHFA. That concludes our interview on CHFA programs and loans with Yoseph Assefa from American Financing. We hope you found this discussion insightful and informative. Stay tuned for more valuable content. And remember, we're here to help you achieve your homeownership dreams. Have a wonderful day. Thank you, Yosef.
Thank you. Appreciate you.
See you, man.